Buddy, it's Wednesday, the 17th of June, 2020. We had a pretty choppy day here. Pretty much a do-nothing digestion day for the S&P 500. It did trade what's known as an inside day, meaning today's high was lower than yesterday's high, and today's low was higher than yesterday's low. So that typically occurs as energy is being digested for the next move. What we can see is we also closed right on that month-to-date volume-weighted average price. That's the blue line, and we are also above a declining 5-day moving average. But tomorrow, once we get rid of this data right here on the open, if we open above this level, basically, that 5-day moving average begins to curl back up as we replace this data from 5 days ago. So I'm not too concerned about that. And the fact is, we'll be getting rid of all this data throughout the day. So we should see that 5-day moving average flattening out to turning higher. One volume weighted average price I had failed to put on here is this, and we'll make it green because it's from the low. And you can see that the volume weighted average price from the low of the month and the high of the month both come together right down here at right now that price is about 309 and a half-ish. So we'll be looking for that area to hold as potential support tomorrow. And of course, we'll have that 5-day moving average turning up to support it as well. Now, the bigger picture, the daily time frame, perhaps we need to digest a little bit more, but the fact is we remain in an uptrend with higher highs and higher lows, and that's the case with the Nasdaq as well. What we need for the Nasdaq, of course, is another higher high, but the fact is we have all of these higher lows with the rising 20 and 50-day moving average. So back over to a 15-minute time frame, we can put similar volume weighted average price levels. There's the high volume weighted average price from the high of the month, that is, and here it is from the low of the month. And those kind of come in clustering together near that 5-day moving average and the month-to-date volume-weighted average price between 239 and 240 and a half-ish. So if we pull back into that area, I wouldn't view it as something to be concerned about. The Russell 2000 will also see this 5-day moving average flatten out and turn higher tomorrow morning as we get rid of this data here throughout the day. So that's one positive. On the daily time frame, of course, we came down to the this prior resistance, and that prior resistance is holding as support. But we're once again rejected the 20-day moving average. So what does that tell me about the Russell 2000? It says we've got a lot of indecision. We've got mixed messages from different time frames, so probably just best left alone. Semiconductors got a little bit extended through yesterday's high and then pulled back a little bit. The pattern is higher highs and higher lows, and this 5-day moving average turns higher tomorrow as well. On the daily time frame, of course, we're coming off of the all-time highs from last week and coming off of the higher low at the 20-day moving average. So you've got to give the path of least resistance the benefit of the doubt, which is higher. I'm not sure I said that right, that it made sense. You've got to give the benefit of the doubt to the buyers because the path of least resistance is higher. I think that's what I meant to say. But, you know, if we were to pull back down into, again, let's say the volume weighted average price from the peak and the volume weighted average price from the low, that brings us down to 150. That wouldn't be bad, but it certainly wouldn't be fun if you bought, you know, here at the close today at 151.79. I don't like losing $1.79 right away, so I think it's just best to leave the semiconductors alone. And of course, the biotechs, as we know, they're still in this range. They've bounced from the low end. They undercut that prior low by a little bit, ticked some stops off, sucked in some uneducated short sellers, and bouncing again towards the high end of the range. I think that it's more likely that we kind of settle down. Probably, you know, the volume weighted average price from this low is where we find the 5-day moving average. So over the next few days, if we're to settle down near 131 and a half, we'll get that 5-day moving average coming up. We'll get the volume weighted average price from this low coming up. So no reason to buy still, just kind of stuck in a range. But I think that's what appears most likely to me as we kind of drift down towards 131 and a half. And of course, these financials, we'll see the same thing with their 5-day moving average tomorrow. The reason for bigger concern here, I guess, or just caution, is the volume weighted average price from the low. You can see we closed below it today. It doesn't mean run out and short these things because, again, where are we on the daily time frame? We're bouncing from that 20-day moving average in the prior resistance. Message of the market in regards to the financials, I think, is just leave these guys alone till they give us an easier setup.